All right. So today's Roundtable One chat is hosted by Sara Cipriano. You know her, you love her. She needs zero introduction other than it's Sara.
Oh, geez.
And today's topic is setting up proper expectations for your buyer when it comes to out-of-pocket expenses. And I think just for me, and I know from a lot of conversations with all of you, sometimes that's really challenging for a real estate professional because we don't always know all of the moving parts. Of course, we get the pre-approval, we talk to the lender, we do what we can, but we don't know all of the nickel and dime things on the back end. So a big question I get all the time is, how do I fill out this buyer estimated cost sheet? And how do I know what to put where? So Sara's going to help us out and help us understand kind of what she does on the back end, all of the stuff that we don't really get to see. We know is there, but we don't get to see it. We're not in it. So she's going to help us understand that, answer all of your questions when it comes to things like lender charges. We'll discuss a little bit about what you should be disclosing to Sara or any other lender at the beginning of the transaction and why it's important. And then again, this is a roundtable discussion. So please, you just unmute yourself, even if you're unmuted for the entire call, ask questions, give your 2 cents, give your examples, because this is what this is about. This is just an open forum and discussion so that we can all become bigger and better real estate professionals that provide better customer service to our clients. So Sara, the table is yours to get us started.
All right. And I'm huge on interaction because I feel like I could sit here and talk about 1,000 things, but I feel like when you interact and you kind of bring in your own experiences to it, that's when you're like, oh, this is going to click for me because I remember this nightmare and all the things I had to do to fix it. And then it clicks. You know what I mean? Otherwise, if I just sit here and rattle off like 1,000 things that for me are exciting because I'm a nerdy numbers person, you're going to be like, okay, this is good. Happy Thursday. So before we get into the numbers part, like the very beginning of the transaction, I get a ton of questions about earnest money, hand money, earnest money, you know, whatever we want to call it. When you guys collect earnest money, it's super, super, super important, especially for the buyers who are like, well, like we're doing grant programs. We're like nickel and diming, like they can do it. They might have decent credit, but they just don't have any money because of life, you know? So the big thing is like, what do you guys think are forms of earnest money that you can't use? So what is something that someone's like, hey, can I use this? And just right off the top of your head, you're like, no, you can't use that. I know you're all muted, but cash, correct. You cannot use cash, never. I've had agents photocopy a pile of 20s and send it to me, and I'm like, I don't know what this is, but I can't use it. Like, this is funny though.
Isn't that a federal offense to photocopy money?
It could be. I mean, I would imagine because I think
I
that's
know
part of
nobody's
like
telling on them, but I'm pretty sure that's a federal offense to photocopy money.
Yeah. So there's one agency in actually in Mercer that does that all the time. I laugh. I'm like, you guys got to quit doing this. Like, we can't do this. So yes, cash is one. Another one, I would say, does anyone have any ideas what maybe another form is? Because I could tell you all of them, but
money orders.
Money orders are a no. Here's why. Because you could tell your buyers, don't take the cash that you have in your mattress and buy this money order. And what are they going to do? They are going to run as fast as they can to their mattress, grab their cash and buy the money order because they don't listen. They just do. They're so excited. They're buying a house. They're literally just like, okay, I got to get him this check and this is how I'm going to do it. The problem when it gets to the lender is we can't trace it. So because of money laundering, the banking acts, all of those, we have to be able to track that money to be able to use it in a transaction. And they think that people are money laundering and all this stuff, which we all know that locally they're not money laundering with their $500 earnest money check. Like, we know that, right? But as far as the government's concerned, Fannie Mae, Freddie Mac, when they go into looking at it, they don't know that. So you have to be able to track it. So absolutely no money orders. And I'll stay with that too, Western Union, because as much as I didn't even realize they still existed, I see them every once in a while. And so That's a thing. So we don't do Western Union. We don't do any money orders. So if you have somebody who says to you, well, this is all I can do. Like, I don't have checks. Like, do you get that question a lot?
Oh, yeah.
Okay. So your bank, if they just go to their bank, if they bank at PNC, Huntington, Greenville Savings, First National, any of those banks, you don't have to have a physical checkbook. You can walk into the bank teller. They can physically print you counter checks that they can then in hand write out. So they don't cost. I know PNC, I just had a client go do it. They'll print them 6 of them a day and they charge them no fee for that. So if they don't have a checkbook, just tell them, okay, you can go to your bank, go to the bank teller and tell them I need counter checks to physically write out myself. And then they can do that and write them out. It makes it a lot easier because sometimes they'll go and deposit money still. If they deposit it that same day, but then write out a check and hand it to you, then they're going to have 2 or 3 days before it clears the bank. So then we have wiggle room where if we need to get a transaction history, their cash deposit is not showing on the same day as what they're writing their check for. Does that make sense?
Mm-hmm.
Okay.
Now, what about, just side note too, if they don't have checks, we use the Earnest app. So that's always something they can do. We actually prefer it because it's super traceable. We can see where it came from, what accounts, we have a whole history that if needed can be sent to the lender that says, okay, here's the chain of events and how it happens.
Yep.
But side note, just because I've had people ask, and I don't really know the answer to this, how do you handle things like Venmo, Zelle, when they ask you those questions, PayPal, which us as a brokerage, we do not accept. Just so that everybody knows, you have to bring a check or you have to bring Earnest, but clients do ask these questions.
So with those type of things, with I very rarely see Venmo or PayPal because generally speaking, a business, unless you're selling goods and services and material things, you're not going to have a PayPal usually hooked up to your brokerage. So we don't see that so much. The Earnest app, I absolutely love because it's basically like a free wire transfer. You know what I mean? Where you can just check it. And I don't know if there's a cost for them to do it, but those we really, really like. If they had to do Venmo or PayPal and it was going to a brokerage, it would be the same thing for us as Earnest because we could electronically just transfer it, view it and see it. I don't know that I've ever seen that before, only because I think they would have to send it to someone personally. And then I think there's different compliance reasons for it where you can't do that because
Right.
Yeah.
And that's what I was kind of getting at, because I have had agents over the years come to me and say, hey, my client doesn't have a checking account. They have cash or they have money in their Venmo. Can they send it to me into my account and then I'll write the check? And my answer is always, do you look good in orange? Because you're going to be wearing it for quite some time.
That's it. Yes. That's a huge red flag on compliance for so many reasons. Because I've had people that say the same thing to me with appraisal. It's like, hey, can I Venmo you for my appraisal? And I'm like, no, I kind of like my job. I really like it. So I can't do that. But yeah, no. So I would probably say the less common things that we don't want to use are cash. They can't use, they could use a credit card if you guys allow it on your platform for Earnest money. But for the most part, you don't want to use cash, credit, Venmo, PayPal, Zelle, Cash App, any of those things you don't want to use for it. You want to use either a personal check, a certified check, a cashier's check. And even those two things are a little bit goofy because, again, people go, when you use a certified or a cashier's check, we still have to show the money trail. So I generally just tell them, get a counter check, write it out. Because, again, they're going to take cash to the bank to buy the cashier's check or to buy the certified check. And then you're in the same thing where you might see addendums come over from me saying, oh, we have to remove this, and they have to get reimbursed at closing because they didn't tell you they did that. But then when you go back and look at their bank statement, we're like, okay, there's no transaction for that. Where did it come from? Oh, well, I got $400 from my mom. I got $200 from my boyfriend, and I had $300 in my purse. And it's like, oh, okay. So, so you can't use any of those. And then a wire transfer, which, I mean, we get some people who want to do wire transfers just because they don't trust anybody with their checking account information. So that's one thing.
How about a business check?
A business check is tricky. It depends. If they're buying it in their personal name, I would say no to the business. You want to talk to the lender. Let me just say it that way, because if they're using when we go through underwriting and say they have a business that might be newer that we can't technically use funds for, or say the business like they have a W-2 job plus like a side hustle business, and say that business loses money. But as far as like underwriting is concerned, we don't have to really show anything with the business. We only have to show pay stubs, W-2s, things like that. Then you don't want to introduce something new into the file that maybe would open a can of worms. Do you know what I mean? So I would just say check with the lender. 9 times out of 10, if it's a business that's been established for a while, they're using those funds for closing anyhow. Like, we're already looking at their taxes. That's probably their only form of income, and it's going to be fine. Otherwise, they wouldn't have been pre-approved in the first place. But I would just say check with whoever the lender is first to make sure that they are aware that, hey, this person's self-employed. Is it okay if they write it from their business account? Because I would say it's a 50-50 shot. Sometimes it's okay and sometimes it isn't. It just all depends.
Okay, thanks.
Yep. So that's a big thing on earnest money. Now, most lenders, myself included, and this is where it gets a little bit confusing. So once a client gets under contract, we send them their disclosures. As soon as they sign, they're going to get a link to pay for their appraisal. That's called a good faith deposit. And it has verbiage on there, and it explains to them, hey, this is for your appraisal. We collect $500 up front. That's it. They get that confused a lot of times with the money that they're giving you as earnest money. So just a heads up that, once they sign, you're collecting their earnest money. And I try to tell them too, like, hey, listen, the realtor is going to ask you for this. Once you sign your disclosures, then we're going to send you a link to pay for your appraisal. It doesn't matter. Like, if the appraisal comes back and say it's $625 and we're only ever going to collect $500 up front, because it's too hard to hone in on what exactly it's going to be. Duplexes are a little bit different. There's certain types of properties that might cost more. They might need a rush depending on like their time crunch with guidelines and stuff with closing. So we just collect $500 as a flat upfront. So if you ever have clients who ask that question, whether they're using me as a lender or anybody, I would just forewarn them like, hey, this is your earnest money, because a lot of them want to know, what do I got to pay right now? And then what do I pay at closing? This is your earnest money. The lender is going to collect a small amount for your appraisal, just a heads up to watch out for that. Because every lender is different. Most of them, they're going to be right around $500. Some are a little bit more, but we're $500. So that's that on that. Do you guys get any questions on anything else, like in the front end, as far as that's concerned, around earnest money, appraisal fees, inspections, that type of thing?
So I know that I've gotten questions of like, does like 733 Chestnut, which, we're doing Sara. When does the appraisal, what do I have to pay for the appraisal? And, the earnest money, does it come off my, closing costs, and,
Yep.
or does it come off my, like, what comes off my loan and what comes off, closing costs? I think they kind of aren't too sure about like those things. You try to explain it, but so much to explain,
Oh yeah. Well, and at the end of the day, like, I'm like the person behind the curtain. So they tell me everything about their life when it comes to money. But you guys are the ones who, like, you're more real. You see them. So they don't want you to know. I don't want to say they don't want you to know all their financial stuff, but it's a little bit more awkward. You know what I mean? Like, because you're physically seeing them. So when we send cost sheets, I used to send where I put the appraisal on there, and I used to send where we put the earnest money on there. And I quit doing that because all they're looking at, and it doesn't matter how many times you as the agent explain it to them or I as the lender explain it to them, they're looking at that bottom number. So say their total closing cost is $5,000. They're giving you $1,000 earnest money, and we'll just say $500 for the appraisal. So if I have that already factored in, technically it's $6,500, but they're only going to see that $5,000 if I actually put the $1,000 and the $500 on the cost sheet. What they think in their brain is, oh, okay, so this is $5,000, but I've already paid you $1,500, so I only need $3,500 to close, right? Like they just don't get it. So, and it's just because they don't look at it every day. So it's, it makes sense. So when you get a cost sheet, at least from me, it's going to have everything before anything they pay out of pocket, because I want them to know this is what you're going to be in, all in, outside of any inspections you might have to pay for. So the answer for that would be, okay, so this cost sheet here doesn't show your earnest money, and it doesn't show the $500 that you're going to have to pay for the appraisal, which you don't really have to go into the appraisal part of it unless you want to. So they would see a cost sheet for $6,500. And then it would say, okay, so when you pay your $1,000, then it's going to come down to $5,500. Sarah's going to collect $500 for an appraisal. So then at closing, you're only going to need $5,000. Does that make sense?
Yes.
Okay. So, so that's the big thing with that. But yeah, anything that they pay outside of, like if they have to get a pest inspection, if they have to do like water tests, if they just do a general home inspection, none of those things get credited, but their earnest money and their appraisal does. So those are the two big things. One thing that I'm working on, and I'm actually super, super excited because Pennsylvania, I know you all probably have a love-hate relationship with cost sheets. And because it's like number vomit in paper form. And it's just because it's really the first page to them, it's all going to be the same. It's just a token like fees, the title, the transfer taxes, all of that. It's really just the second page that you need. But what I'm working on is a program where once we set a file up, so we'll have the file set up, we'll have it set up if they're getting a grant program, we'll have it set up, whatever the loan type is, and we can do different scenarios on it. There's going to be an app that you as agents can literally go into, put in the address, put in the purchase price, and put in the taxes, and it will generate a cost sheet for you. The same exact cost sheet that I sent you. Because what I feel like happens a lot is you all are out showing houses, and that's a lot of work, first of all. I mean, like it's a ton of work to just go from place to place to place. And it doesn't seem like it would be something that's super hard, but it's tiring to do that. I went with a friend of mine maybe a week ago, just to see what she had some questions and stuff. And at the end of the day, I told my husband, I'm like, this is terrible. Like, this is a lot of work. And I was so tired. But anyway, so my hat is off to all of you for doing that, because it's a ton. But I feel like sometimes, what happens is that people say, oh, there's this house and it's vacant. Can we go see it? But as an agent, buyers are telling you, I don't want my payment to be over $1,100, and I don't want my cash to close to be this, and I don't want that. So like, obviously you don't want to tell them, no, I don't want to take you to that, because you don't want to upset them and have them go to see somebody else, right? But if you can literally punch in the address, the purchase price, and the taxes for it, you could bring it up and show them in a matter of a minute, hey, this is what your payment's going to be. Because you might know in your head, this isn't going to work for them. That's going to be way higher than what they want to do. So you can actually punch in those things and say, well, here's a cost sheet for it. Let's make sure you're good with the numbers, because I don't want to show you something that you might love, but then you're like, oh, I can't afford that. You know what I mean? So I'm working on that, and I'm hoping to have it by maybe like the first or second week of June. So we're still kind of going through testing it, but I'm hoping by then we have it, because I think it's going to be super helpful for you guys. But I know right now you have, is it called Palm Pilot? Is that what it's called for what you can do your cost sheets and run fees on?
Palm Agent.
Palm Agent. Okay. So when you use Palm Agent, does it mainly just pull in like your realtor cost and title, like so transfer taxes and things like that?
Yeah, and we can add things to it too. Like, so I always go in and I'll add like the broker's fee, and then I'll add in my commission, and it'll say like you could choose whether, if the buyer's paying it, if the seller's paying it, or if they're splitting it. Even with the transfer tax, you can kind of do that. With the taxes in general, like you could do a yearly one for the year, or you can, like, I sit there and I enter in with the MLS, like what each like county, school, and stuff like that, and then it actually prorates it as well to the closing
Okay.
time.
Okay, good. So really the only thing that it's not showing you is the lender side of it. And that's kind of where it gets a little tricky. So I'm going to share my screen here so you can kind of see. This is a client that basically, so we help all kinds of people. So we'll help people all the way down to a 580 credit score up to the best of the best, right? And when you're looking at houses, people aren't telling you, hey, my credit score is terrible. So when it's terrible, we can still do the loan, but the problem is that the rate's generally going to be maybe about the same or a little higher, but the cost of the rate, like the broker wants them, like those are files that we might broker, they want them to have skin in the game. So what we do is we come in here and, like, say we pull pricing on this one. This one here has a 592 score. No, this one was a 609. I'm sorry. But the pricing from a 580 to a 620 is all the same. They're just not, unless you're doing, well, you wouldn't have a grant program on those anyways. So just to kind of give you an idea. So here's when we go into lock interest rates. This is what it looks like. You can lock it anywhere from 8 1/8 all the way down to 5.375, right? So when you come in here, you generally see this is the cost of the rate. So 100, if this was 100, that means there would be no cost for the rate. So if you have, whoops, I'm sorry. So like say for this one here, these are all pretty close to the same. I mean, they're not too far off, 97.2 to, we'll say 7, well, this is still not that bad. 95. So we'll go to this here. So to like 7 1/4. So 7 1/4, if the par price, which means you pay nothing for points. If this was 100 in this column here, then there would be 0 points charged. But because their credit's bad, they're going to have points. So we'll take 96.536 and subtract it from 100. So that's where you get, okay, you might see sometimes on an Alta, they're paying, points. So 3.464. So when you get a pre-approval from me and it says, please be sure to ask for full seller assist, that's because once we put these points in, and I'll show you, let me unshare this for a second because I'm actually in a live file, so I don't want to share this guy's social or anything. But we have that number. It was 3.464. That's how much we would have charged him in points. If we do that, then it's going to, I'll show you here what it looks like. Hang on just one second. But once we put that in, you basically get a QM failure, which is like an audit trail for lending, because we can only charge them so much in fees according to their loan. So once you add in title and appraisal and everything else that goes into it, if they have to pay a lot of money in points, it's going to put it over that percentage. So then as a lender, we either have to waive it or we have to offset it with seller assist. So when you see me say, hey, please make sure, you ask for seller assist on it, it's either because they don't have a ton of money or they have not great credit and they're going to have to pay a significant amount of points. So then when they pay points, that's going to throw this off. And I'm going to share this here just to kind of show you what I mean. So let me do this. Because I think this is where, like, a lot of times people say, why are their points so high? And that is so crazy. It is crazy, but when you look at the whole scenario, it's really just not crazy. So like, this is, okay. So like down here where it has points and fees, and I just did a snippet on my thing because otherwise I can't not show you what this guy's name is. But once you put the points in, then this says here how it says it exceeds the threshold for qualified mortgages. So that just means like, hey, I either have to get it under 3%, whereas right now it's at 4.5, or I have to waive 1.559% of that. So it would be like for you as an agent, it'd be like, okay, I can make this deal to work. I'm getting paid 2.5% commission, but I have to waive 1.559 of my commission. So now I'm getting under 1%. So it's the same kind of thing on the lender side of it. So that's why we ask for seller assist, because then we can offset this amount. So that way this gets under the 3, because you're technically taking the funds from the seller and buying down the interest rate. So it's not a buyer expense at that point. Does that make sense? I'm gonna say it makes sense.
It makes sense to me.
So just to
Talking,
kind of,
and I didn't know I was muted. I was just talking to myself.
that's okay. So just to kind of give you an idea, like those are some of the things when we're looking at it. Now, like when we're looking at grant programs and stuff like that, they don't have they don't have any points. They don't charge points for anything, which is why PHFA is so nice. If they fall within those parameters, you can't get any better than that, because they don't charge points for anything. And generally the rates are lower. So that's why it's important to get a cost sheet. So say like on that example, it was a $200,000 loan. And if they have to pay, we'll just say for even numbers sake, 3% in points because their credit's bad, that's a $6,000 swing in their cost sheet from what you might give them to what I'm going to give them. So that's why it's important to say, hey, here's the situation. Can you run me numbers on this? You know what I mean? And I will do it anytime you ever need that, because I don't want someone to come back and say, oh, Christina gave me this number. Why is yours so much? Because they're either going to be super mad at me and think that I'm pricey, or they're going to think that Christina's trying to just screw them over, for lack of better words. And it's neither of the two, because Christina doesn't know their situation. And they know better than to say that to me, because they know I know their situation. Does that make sense? So it's one of those things where it's just super, super important, that you get the cost sheet, just so that way we know, because we know their credit situation. And then the one thing that I would say is, if you know that they're paying a commission, make sure you tell us so we can factor that in. So I generally ask all the time, but if you deal with a lender that's not asking that question, you want to ask that, because you want to make sure that they know and make sure it's in there, because the last thing you want them to do is see like, oh, this is this nice little number, but now they're paying comp. And well, that's so expensive. Why are we doing that? Well, they're doing that because you guys are working hard for them. You know what I mean? But they don't think about that when they're thinking about their money. They just think of, that's a whole lot of money. Like they agree to paying it, but then at the end of the day, if they don't see it in black and white, like when they look at that cost sheet from us, they think that's everything. So it's just important to make sure that whatever it is that they're paying, whether it's the admin fee, whether it's a percentage of comp, whatever it is, make sure that before you present that cost sheet to them, that everything's on there, because you don't want to make it seem like you're an extra expense that they can do without, because they definitely can't do without you. Trust me, I know. I deal with for sale by owners, and it's terrible. So, do you guys have any questions? And gals?
Not right now.
Yeah. But that's about it. I mean, I would say those are the main things. And I'm super excited once we get that app up and going, where you can go in and make those adjustments. Then I'm going to set up a call with everybody, and we'll set up accounts for every agent, so that way they can go in and do it. You'll be able to adjust pre-approval letters on there. And the nice thing about it is that I can set parameters. So, if they don't qualify for a certain payment, then I can say, okay, you can make these adjustments, but you can only go up to this payment amount. Now, if you punch in a house that will put them over that payment, it's going to come up in red and say this client doesn't qualify for this. You know what I mean? So it'll save you from that situation too, where you think, oh, we're good, to I mean, I can put money parameters on there, payment parameters, purchase price. So it's not going to allow you to do something that I wouldn't be okay with you doing in the first place, as far as like a pre-approval letter or anything like that. But it's just going to help you for when you're on the fly, or if you're pulling your MLS sheets to take people to show them, and you can just literally print out your own cost sheet for it and say, okay, I'm meeting you tomorrow. I mean, we all do it. You either get up super early, you stay up super late, and you're getting prepared when you're quiet, your house has gone to sleep, and you're like, okay, I'm going to prepare for this. It'll just make it so that it'll take you 2 seconds. You can punch in the address, taxes, and purchase price, and then you can be prepared for all of that. But you can still email me all those things too, because I love talking to all of you. So that's all I got today.
All right. So who has questions about lender's costs?
I have one question.
Mm-hmm.
At least I think it's written this way on the agreement. If we're projected to close within 30 days of when the contract is made, it has to be earnest money, has to be a cashier's check, right?
Well, it doesn't have to be a cashier's check. It can be a personal check. It can be a personal check. It could be a cashier's check, as long as they're withdrawing the money from the bank. If they're taking cash to buy it, we can't use that.
So that's more of the broker's call. It's okay with the lender.
Yeah. So on a brokerage level, like if we have personal funds for escrow and then you turn in your commission, we have to hold your commission until the check clears the bank, because escrow is just money in, money out. Like there is no float in an escrow account to cover any bounce checks. So we're required to, like, if we tell the state, and the state can see the escrow account at any time, if we tell the state, okay, we have $5,000 in the account that belongs to 5 people, and then a check bounces, and we've already paid and transferred the escrow funds from the escrow to the commission, then we're in violation of the state and they could take our license. So because it's a money in, money out, we've removed somebody else's money, and that's a violation.
Got it.
So, yeah, if you are turning in a personal check, just so you know, depending on who the bank is and how much funds they have in their account or lack thereof, it could take 10 to 14 days for that check to clear. So sometimes they clear in a couple days. Other times, if the people have questionable banking habits, it could take the full 14 days to close. So certified check is always best in that scenario where you're closing pretty quickly.
Got it.
Good question.
Yeah, have them use earnest, have them wire in, or wire directly to the title company.
Well, and that's the other thing too. Here's one thing I didn't say when it comes to this. Some people say, can my mom pay my earnest money? She can, but she needs to do the same thing. She needs to write a personal check, because we have to treat it as a gift. And so we have to, back in the day, you used to have to get bank statements and all of this, like, to do around a gift. Now, all they have to do, if they write a personal check, I need a cleared copy of the check from their bank, and that's it. So if they do it any other way, there's a lot more rigmarole with it, that just the personal check makes it easier. Or if they wire it, we need a copy of the wire transfer confirmation from the bank. So that's the other thing.
Excellent. Excellent. Any other questions? Here's a question that we get. I know that me, Kat, and Olivia get it a lot on the back end. Sometimes Kathy will get it too when you're using your Earnest app for your escrow money. A lot of times the lender or the listing agent will ask for proof of hand money. That is provided when they pay their earnest. That is provided in your email and also in your app. You do not have to reach out to accounting to get a copy of that. They send a confirmation when it initiates, which is not what Sara would need. We have to see when it hits, when it clears. So you get an email that says you requested, you get an email that says they initiated, and then you get a third email from Earnest that says it was deposited. So that one that you get that says deposit notice from Earnest, that is their receipt. So that is the receipt that you use to provide to your lender, to provide to the client if they ask you for proof of deposit, and to provide to the listing agent. There is no physical check. There is no wire confirmation that's different than what you get in your email or app that Kathy has. You use that email or use your app to generate that ticket to provide, to the lender and to put into SkySlope as well. Belle has a question. Can you talk about insurance? Oh, hold on. It just disappeared off my screen.
Yep.
And talk about the insurance that shows up on the cost sheet. I get questions about hazard insurance sometimes. Is that an estimate?
Yes. So we see so many different quotes. It's crazy. So we have a general good idea of how much they're going to come in for. Now some agents quote like super, super high, and there's just some clients that they just can't afford that, right? So I always, when I do a cost sheet, the hazard insurance is the same as homeowners insurance. It's just a different word for it. And I always estimate just based on what the market is as a general. And usually like for a house that's under, I don't know, $250, I'm probably always going to put $75 in there. If their credit's a little bit worse, you might see it be a little high because some insurance is based off of their credit score, and then there's other ones that are not based off of that. So generally speaking, for like a $200,000 house, I'm going to have $75 in there. If it's anything over that, I'm probably going to have 100 in there just to be safe. And I always tell people, I'm like, look, the only thing that's going to change as far as your payments concerned on this is if the insurance is different, because your taxes are not going to change, your loan's not going to change, the PMI is not going to change if you have PMI. So if it fluctuates, it's literally only going to be in the insurance, and it could go up or it could go down. So we've quoted, sometimes we'll quote people $100 and it'll come in at like $68, because they have super good credit and their scenario is just good. We've had other ones where, they're not telling us that, oh, I've crashed my car 5 times. I had a house fire. I ran into this. I did that. And they filed a million claims. Well, then their insurance, like it might be $120 a month because they're just clumsy, I don't know. So, I mean, it could fluctuate a little bit, but generally I put anywhere from, it used to be 65 but insurance has gone up a little bit. I usually am anywhere from 75 to $100 is what I'll estimate it at. But then it could change.
That's good.
And I always joke with them. I'm like, look, at the end of the day, you're squabbling over like a good dinner, or depending on the client, a case of beer, like sometimes you get them to just kind of like ease up and joke around a little bit. They're like, oh yeah, that's not a huge deal, because you're correlating it to something like tangible in their everyday life where they're like, oh yeah, I'd go buy a case of beer. I don't care about that. You know what I mean? But like when you're talking about insurance, they just think, ugh, I don't need that, but they do, so.
Any other questions we got? All great questions.
Mm-hmm.
No? All right. Well, then, if there are no other questions, we'll go ahead and wrap it up. Thank you, Sara, for joining us and taking time out of your very busy day. Are you sitting in your new office in Hermitage?
No, I'm up in Erie today. So,
yeah,
I'm up in Erie today, and this is my little space. It's like, it's a little space. It looks like the Home Alone house outside, and I just sit up in like a room. So.
Oh, okay, great.
Yeah,
well, enjoy your day in Erie.
All right.
And if you guys have any additional questions for Sara, I'm sure she would welcome a call after we get off the phone call here. And if you want to refer back to this, of course, the recording will be on the blog by the end of the day. So feel free to check it out.
Awesome. Bye, guys. Thanks for having me.
Thanks, everybody. As always, I will stay on the end of the call in case anybody needs me for any reason. And if not, I'll see you guys soon.